So I'm delighted to have as my guest today Joel Mueller, who is a managing director at Barlow Research and oversees a lot of their proprietary research. And we're going to talk about a topic that is extremely important to community and regional banks across the country, and that's the subject of business deposits and how to grow them. And it's great to have Joel with us because Barlow has done a lot of work in this area. And Joel, for people who are not familiar with Barlow Research, do you want to give them a thumbnail on your firm?
Of course. Hello, everybody. It's great for the invite. Thanks for having me on. Barlow Research is a marketing research firm. We were founded in 1980. Our niche is specifically collecting voice of the customer data from small business and middle market companies. And we've been doing that obviously for a very long time. We have a few flagship syndicated research offerings that we base a lot of our trends and findings and insights on. And like I said, we are our niche and what kind of draws us apart from our competitors is that we really focus only on business banking. We don't have a consumer banking segment. Our research is solely based primarily on survey research from those companies.
And I would add, it's been extremely valuable to me to be able to follow the trends that Barlow has been really focusing in on for years, in addition to focusing in on newer topics. And so today, as we talk about business deposits, one of the things that your research has demonstrated is that beginning in 2023, after the very well-publicized failures of people like SVB and Signature Bank, there was a lot of interest in exploring other options. People were shopping around. Has that continued?
Yeah, I mean, so we fielded a study shortly after that happened. It was kind of in early April where we asked, have you reevaluated where you're holding your business deposits? We asked this to companies with sales volume, what we consider small business sales volume, 100,000 all the way up to 10 million. So we kind of have our definition straight. We asked them if they reevaluated where their money was being held shortly after those bank failures occurred. We found is that 47% of them said that, yes, indeed, I am looking at how safe my deposits are. A follow-up question to that was, are you actively shopping or have you been actively shopping since this has happened? An identical percentage, almost half of small businesses in our survey said, yes, we are actively shopping. Now, fast forward, we surveyed them again in August. We asked a very similar question. This time, we kind of pulled out those who actually moved some money, which kind of equals out to roughly over a quarter of businesses. And we asked that chunk of businesses, truly what made you switch your money? And the idea of their bank being unstable or the bank failures really didn't come into play. It was only about 12%, I think, of small businesses said that really had anything to do with their decision to move their money. So it really has died down. It started up really high. The scare factor really, peaked at the end of March. And ever since, that's been coming down. The caveat I will put to that is that a large chunk, over a third of them, are still saying now is a good time to diversify their relationships to stay under that FDIC limit. So that sentiment is still out there. It's not the driving force, is what my sense is.
Mm-hmm. So that's focusing on the under 10 million in sales segment. Is there anything different in your research on larger companies? Because I know you also look at companies of larger in size.
Yeah, there is absolutely in our what we call our middle market segment, which is 10 million all the way up to 500 million. You saw a very similar percentage that were kind of spooked initially, right? It's that was fairly similar regardless of market. The biggest difference is that those companies were a lot more likely to say that the FDIC limits really did play into their decision to move their money. So you got to think of these companies have much larger balances. There's a lot more at stake for those kinds of companies. Should their bank go through some kind of signature or Silicon Valley Bank crisis, there's a lot more at stake for them. So they wanted to get under those thresholds, and we did see more movement up market.
So would you say that the people who moved, focus on the small business segment, if they weren't really concerned about the safety and soundness of their banking institutions, was it rate that was driving a lot of their thought process?
Absolutely, yes. So rate was by far the most important factor that would play into their decision to move money from one institution to another. Now that may come in the form of opening a completely new account. It may come in the form of opening a savings account at their current bank that they weren't utilizing before. Regardless of where they were opening this or moving their money to, rate was the driving force that would push them to move money. In fact, 6 in 10 small businesses said that they were willing to move money from a short-term investment account to another institution from their primary bank based on rate alone. The funny thing is that most small businesses don't necessarily have high deposit balances. So whether or not they're an opportunity or it's a big deal if you lose a couple customers based on rate, is another thing. And I think we'll get into why that's so important to kind of carve out a niche. But certainly rate is always important. It's a priority for them. And it is always the number one reason why they selected the bank they did when they actually did move money.
Were people also moving money to outside the traditional banking system as part of this process? I mean, I listen to the radio and I hear ads for entities that would fall more in the fintechy kind of space. What's been your experience, and what does the research show?
Yeah, so I hear those same ads, and what we found in our research over these past 6-8 months was the institutions that, especially in the small business market, the institutions that they're selecting are very diverse. You still have a lot of small business customers moving money to another large institution, but it's really that middle segment of banking. These are banks with assets between 1 billion and 50 billion. That size of bank actually gobbled up a fair amount of share. As far as the fintechs go, yes, for sure, there was about, you call it a little less than 20%, I believe, that actually open an account at a fintech. Some of the bigger names are going to be the Amexes and that kind of institution, rather than any smaller firms that are offering some kind of depository account. But that sentiment is completely different in the middle market. So small business, yes, it's very diverse. They're going to go to banks of all sizes, fintechs. Yep, give me the best rate. That's where I'm going. In the middle market, it's a much different tune. They're going to look for a lot more stable relationship. They're looking for a large institution, big name, someplace where they feel really, really safe. And they're not quite as worried about rate as when you compare them to the small business market.
So things I am curious about, because the research that Barlow has conducted has focused a lot on the importance of the primary account officer. And that's an ambiguous term, because the primary account manager could be a branch manager. It could be the president of the bank. It could be somebody who is not specifically tied to credit as opposed to something else. But when you look at the importance of those individuals, one of the things that we've often felt was that, among other things, in addition to being responsive, in addition to being able to help a customer navigate through the bank's system, they need to know something significant about the industry of the companies they're banking, particularly if they're trying to win them over. Has your research demonstrated that in any way?
Oh, yes, absolutely. So from my perspective, small businesses are looking for, they're looking for attention. They want their bank to know and understand them. In order to do that, you have to go a level beyond just what their business financials look like and understand how the fundamentals of their actual industry are kind of clicking. What our research will tell us is that about 2/3 of small businesses will say that having their primary contact at their primary bank be knowledgeable about their industry is either a top priority or very important. So that's a large segment of small businesses, and that's going to be a large lift for banks as well, to be able to pump that kind of industry knowledge into their bankers on the street. It's certainly a challenging thing, and we can tell it's challenging by the ratings we see in terms of performance of account officers on that same metric. When we ask them, how well is your account officer actually performing against that attribute of knowing and understanding my industry, we're only seeing about half of small businesses saying that their account officer does a really good job of that. So there's a gap of about 16% there, where we're seeing a good opportunity for education at that banker level in knowing and understanding an industry that I think can make a real difference. It makes that relationship much more sticky. Beyond that, I think there's so many resources out there and available to us today where there may not have been 10, 15 years ago, that really are allowing you to get smart on a given industry in a very specific targeted industry. And I think that there's just a tremendous opportunity to offer some unique insights and some unique value to your business clients, especially if you're competing against really large national banks that have built out, groups of bankers that are, we're focused on veterinarians, and we have this group, and they're just going to know everything about veterinarians. They're going to know all the products, and they have a whole team dedicated to that. I think there's a lot of solutions that would allow smaller institutions to kind of get smart and be at least somewhat competitive with those other larger institutions.
100%, Joel. And I think part of it is, it's banks are trying to identify opportunities for increasing their deposits and their TM fee income. They have to get smarter in ways that maybe in the past they haven't, because a lot of banks have ignored deposit-only type relationships when they said to themselves, well, we've got plenty of deposits. Now that deposits are at a premium, people are starting to rethink who their target market is. So looking at industry information for people that don't borrow money and understanding how they manage cash might be something that they should spend a little bit more time doing. And we do know people. There are lots of people who provide great industry research, and at the risk of offending people for leaving them out, Vertical IQ, IBIS World, S&P, RelPro, there are a lot of people that do this extremely well and help people find that kind of data. So I'm with you on that. So recognizing that, and I think your research has borne this out, that if you're really looking for deposits, you got to fish in the right ponds. And the 80-20 rule kind of applies. If you were giving people advice, and I'm not asking you to identify, which segments people should go after, because that depends. It depends a little bit on the appetite of the bank, their capabilities, what's in their target market. But what advice would you give to bankers about pursuing niches at this stage?
I think the simplest advice I would give is that deposit strategy in the small business market is not a mass market strategy. As you mentioned, the 80-20 rule is actually a 19-80 rule. There's 19% of businesses that hold 80% of the deposits in the market. So it's finding out who that 19% is, and then dissecting them and understanding their banking behaviors. That's going to be really important. What we've found out is that 19% is made up by a select, call it 7 or 8 industries that offer really true deposit opportunities. What you're contending with is that they're generally not a secret. Higher ed's in there, legal services. These are high deposit industries. They tend to hold large balances. All of the national players are going to know about that. Large national banks are generally going to know about that. They're going to have a strategy. They're going to have something stood up and built specifically for attracting clients like that. One of the useful techniques that I would encourage many of your listeners to do is to be just a general Google search on the top 10, 15 banks. Look at their industry specializations. What you'll find is that 7 out of 10 of those banks will focus on about 5 or 6 core industries. Go beyond those 5 or 6 industries, and there's a lot of opportunity. We also are keenly aware of specific industries that aren't as attached to a primary bank as other industries tend to be. So think of things like real estate investors. These type of industries, certainly have their challenges from time to time. This might be one of those times. But these industries tend not to be as attached to a primary bank relationship. They're less dependent on a primary bank relationship. The work that we do tends to identify those specific verticals or industries.
Well, I think that's good advice. I do know that among other things, Barlow has taken a deep dive into some of these industry sectors, and you actually produced a report this fall that, I don't know, it's not shameless commerce to say how people might get the report, but how might people find anything that might help them further in identifying opportunities?
Yeah, we published a study called Finding and Protecting Business Deposits. We published that in September. Certainly available to any financial institution that's looking to help drive up some deposits and attract deposits, and almost more importantly, retain some of the deposits that they might be seeing outflowing. You can simply contact me. Ned, I know you're going to offer some contact information along with this podcast. So just feel free to reach out, and I will be able to assist you in understanding what that study is all about.
That's great, Joel. Well, thank you very much for spending time here. This is an important topic. I value what you and your colleagues at Barlow Research will continue to do. And I do think that people ought to further investigate some of the great work you're up to. So thanks again for being part of this NedTalks.
Yeah, appreciate it. Thank you.